Time now to focus on the tech trade after the Fed's rate cut yesterday. For that, we want to welcome in our next guest, Dan Ives, Managing Director, Equity Research, Wedbush Securities. Dan, it is so great to talk to you. You know, we always love having you on. I saw you out at a conference recently. I saw pictures of you, I should say. I wasn't there. But let's talk, and you look like you were having a great time. But let's talk about the rate cut, the 50 basis point. A lot of people were not expecting that. I'll confess, myself included. Were you expecting 50 bips or were you in the 25 camp?
I mean, our view is this was going to be the Fed ripping the Band-Aid off. I mean, in terms of cutting 50 bips, I think was a huge first step to what's going to be just a massive dovish stance over the next 12 to 18 months. And for tech investors, that's a risk-on trade. It's bullish. That's why today a lot of those bears that have been out for the last month after a few years in hibernation mode, they're going back into those caves this morning.
It certainly seems that way. I mean, you've got markets hitting new all-time highs today. We're looking at the S&P 500 continuing to advance, NASDAQ 100 really rallying today. How does this impact the AI trade in your view through the balance of the year?
Oh, I think tech rips higher. I mean, rest of the year. Look, first off, you have $1 trillion of AI-driven CapEx coming to tech over the next, call it, 3 years. And that fundamental story, I mean, we just got back from Asia, and that's accelerating, not decelerating. So I think it shows demand's outstripping supply 15 to 1. Tech AI names, I believe, rip higher into year end. And I think going 2025, now you're going to see more second, third derivatives of that trade, and even small caps starting to participate. Now, I continue to believe it's 9 p.m. in the AI party that goes to 4 a.m.
So it goes to 4 a.m. We've heard the analogy before in terms of innings for the AI trade. Are we still in the early innings from your view? Because you had started to see some commentary about, okay, things are maturing. Are we going to start to see the second case, the use case for AI? And that's kind of what investors were looking to hear more of. Okay, what's the use case now?
Yeah, and that's what, look at the Messi of AI Palantir. I mean, that's front and center in terms of the use cases. Use cases are exploding today. I mean, we have 4x the amount of use cases than we did going back, call it 4 or 5 months ago. That's why you see in the strength in ServiceNow, Oracle. I believe ultimately you'll see strength in Salesforce and a lot of other software names. Because now the use case, the software phase of AI is starting to play out.
Let's talk a little bit about Nvidia. The shares are higher, as I guess can be expected today, especially when you see this big risk on trade. What does that tell you about where Nvidia stands and, kind of some of the naysayers recently?
Yeah, the haters are going to hate. But I mean, we just got back from Asia and demand continues to accelerate. And like I said, demand's outstripping supply 15 to 1. You start to look at Godfather of AI, Jensen, Nvidia. This is just the start of the AI revolution. We believe a year from now, Nvidia is a $4 trillion market cap.
$4 trillion market cap. I mean, that's a huge statement to make. What's the thesis behind that for Nvidia hitting that level?
I mean, look, you have $1 trillion of AI-driven CapEx. They're the only game in town. Numbers, we believe, go up significantly higher. I think the street's still underestimating in terms of what ultimate demand looks like here. And I think as this all plays out, it is not an expensive stock. And I think when you look next 6-12 months, not just about NVIDIA, but I think rest of tech, we believe tech could be up 25-30% over the next year.
Can AMD catch up at all to NVIDIA?
Look, Lisa Su, you never bet against her. I mean, they will be a clear beneficiary in terms of on the chip side. I mean, a lot of that we won't see probably for another 18 months. But I don't believe a lot of that AI is being built into AMD. I think AMD is going to be a clear beneficiary. And look, this is a big enough ocean for more than 2 boats. I mean, we are seeing a 1995, almost 1996 moment. But this is not a 1999 tech bubble moment. And I think that's why a lot of the bears are going back into hibernation mode.
So you say the bears are going back into hibernation mode, but is this just a moment? Because there have been critics who say this is they worry about a bubble for AI. Why aren't you worried?
Because we see the spending. I mean, you see the use cases. I believe this is the biggest transformation we've seen in tech in the last 35, 40 years. It is a fourth industrial revolution playing out. This is not hype. It is real. And I think we see that more and more with data points, whether it's Oracle, Palantir, ServiceNow. We see it, but I believe Salesforce and others. This is just the start of this AI revolution, obviously being led by Godfather of AI, Jensen, Nvidia, Nadella, and Redmond, but it is not stop. It's not stopping. And also, the Bears have hated this rally for the last 2 years, and I think it's just going to be another painful year ahead for the Bears.
And then you said you were recently in Asia. What stood out to you about the potential for growth within tech and AI from your visit?
Demand's accelerating. I mean, we're seeing that across the whole supply chain. Use cases exploding. You only have 3% enterprise that have even gone down the AI path. We come back from Asia incrementally more bullish, not just on AI, the broader tech trade, including Apple, despite many yelling fire in a crowded theater this week.
Are you in the camp that's expecting a supercycle for iPhones for Apple?
Oh, this is an AI. If you looked up supercycle, you'd see iPhone 16. This is an AI-driven supercycle underway in Cupertino. Pre-orders, I believe, in line with expectations. No one was expecting strong pre-orders. It's about going into the holiday season, and this would be Apple's strongest unit year ever.
All right. Well, I'm overdue for a new iPhone myself.
And that's a bullish indicator as you upgrade.
There we go. Dan Ives, thank you so much for rejoining us.